What's going on, guys? My name is Lior and welcome back to my channel. Now, what I thought I would do in this video is talk about why I've been spending a lot more money on upgrading my rental units with nicer finishes. I talk to a lot of investors and operators a lot that, when we talk about construction, always, try to figure out how to squeeze dollars and how to save money on, on construction and different shortcuts they can take. But I kind of have a little bit of a contrary opinion to this. So I'm going to talk about it from the context of operations, finances, and most importantly, the market today. So with that, let's get at it. What's going on, guys? My name is Lior and welcome back to my channel. Now, before we get into the meat and potatoes of the video, super quickly, guys, if this is your first time on my channel, first of all, welcome. Second of all, make sure you smash that subscribe for me. If you guys don't know, I am a multifamily investor and I am putting out tons of videos all the time talking about deals. I'm giving you tours of my own projects, strategies on raising money, executing deals, and literally everything in between. So if you are thinking about doing anything in the multifamily space, whether you're an investor, operator, whatever it is, make sure you subscribe to the channel and you'll get updated every time I do a new video. So as I said, I have a lot of conversations with other operators, and a lot of times we talk about construction and finishes. And I tour a lot of other people's renovation projects as well, right? And one of the things that always has kind of baffled me is this kind of need almost by some operators to just squeeze dollars on some of the weirdest places, or some of the most exterior facing places is probably a better way to say it, to kind of save some money on finishes, right? And if you really think about it, and this goes true whether honestly you're renovating for apartments or even if you're doing condos, honestly, but we spend a lot of money on upgrading things like mechanicals and systems, but at the end of the day, it's those outer finishes that a lot of people ultimately will only care about, right? Like if you think about a potential tenant walking through an apartment, he doesn't care that there's updated plumbing or an updating electrical, right? That doesn't matter. He or she will care about, wow, look at this like beautiful countertops or beautiful appliance package, right? Like that's what people really look for at the end of the day, right? I mean, it's it's pretty simple, but it's kind of the truth. So there's a reason why I personally started to really develop and invest into my finishes. Some might call it a little bit over, but I really believe in this strategy. And I'll talk about it from a couple of perspectives. The first perspective that, most people kind of think about is what kind of finishes do I put in my building based on the asset type and location of the building, right? And for most people, this is pretty straightforward kind of exercise, right? If you are, if you're investing in a quote unquote nicer area or more desirable area, or you're investing in buying a Class A product, it is going to be expected in theory that you put higher end and nicer finishes, right? Because that tenant base, whoever's going to rent those kinds of apartments, is going to demand nicer product, right? And most of us can really understand this, right? Like, look, I have to match the location and the quality of the building with my finishes to kind of, for it to really make sense for the tenant who's potentially renting out the units. Now, that's pretty straightforward to understand. So let's kind of talk about from the next perspective, which is the perspective of your exit strategy. Now, from an exit strategy perspective, right, we all, one of the things that of course is going to drive demands is very logically your sales price, right? Assuming you're going to sell the building after you're in a couple of years, right? And in multifamily, what determines the sales price? It is the NOI, which of course is determined in part by your rent roll. The stronger the rent roll you can get, of course, the higher the NOI and the more value you can extract out of the building. So pretty logically, that would imply that if you can really squeeze your rents, right, and really generate top dollar rents, then, you can in theory really achieve a very strong NOI and achieve a very, very strong sales price. As an investor, you'll need to figure out up to what point does it make sense for me to deploy capital to upgrade the units, and up to what point to maximize that rent for that particular area or asset class, as we talked about before, right? Because again, if you're thinking about it strategically, right, if you can really generate as high as possible rent, that possible unit could command, then you're going to maximize the sales price of your property. And a really simple exercise that I kind of put out that I think a lot of people can really resonate with, right? So, and I'll give you an example from my own renovations directly, right? So what we've been doing over the last year or so is really spending much more money on a lot of the finish, especially in areas like the kitchen and bath, right? And in the kitchen, for example, instead of doing, more durable laminate countertops or even granite countertops, honestly, I've started to spend a little bit more money and add quartz countertops. That's, I think, stands out, is really nice. You see that in a lot of condos today, and I think it really attracts a lot of tenants, especially in Class B and even Class A product where we have a lot of holdings in. So stuff like that, right, are nicer countertops. I've also spent more money on more sharp hardware for the kitchen, right? So I get really nice knobs. I spend a little bit more money on our appliance package to get a really nice stainless steel appliance package. Other things I've done is spend a little bit even more money on electrical, right? So in a lot of our apartments now, I'm adding recessed lighting as opposed to just having one fixture in the middle of the apartment. Now, again, for simple math, let's say that, runs me on average an extra $5,000 per unit, right, to make those extra renovations. Now, a lot of investors might say, well, no, I'm not gonna spend that extra $5,000, right? Why would I do that? I don't know if I necessarily need it. Maybe if it's like a, wavy Class B, Class A kind of product, you're not 100% sure if you need to invest that kind of money into it. And a lot of investors might balk and operators and say, like, look, I don't want to spend that extra money. But here's the thing you got to do the math on, right? Let's say you can spend that extra $5,000, and in return, let's say you can command an additional $300 per month on the rental side, right, per unit. So what would the math stack out? Well, if you get an extra $300 per month on a rental unit, you annualize that, that's $3,600 per year. You gotta remember you have to capitalize that value, right? So that extra $3,600 per year, right? When you capitalize it on, say, on an average of a 5 cap, right? Let's say you're playing in a 5 cap market, that actually yields you $72,000 in addition. So you're basically investing $5,000 that, a lot of people might not necessarily want to, but for that $5,000, you are generating what? Almost 15x return on that investment based on a capitalized value of that additional rent increase you're gonna get. I mean, that's just a no-brainer to me, right? So you really have to think about the incremental value you're getting from an exit strategy perspective to see if some of these extra, investments or improvements that you're gonna do are gonna be worth it over the long haul. This exercise actually becomes just as interesting and potentially even a little bit more important if your strategy is to do a cash out refinance, right? Because on a cash out refinance, you are going to be limited, like on the sale exit strategy, by the ultimate value of the building once it's done. But you're also going to be limited on a debt service coverage ratio basis on how much cash you can pull out of the building. So if you're able to not only increase the building's value by, substantially by investing a little bit more and creating nicer finishes, but you're also able to increase your rent roll so that you can have a stronger debt service coverage ratio, you're making it much easier on yourself to have the possibility of refinancing, taking out more cash out of the property, and distributing more cash back to your capital investors, right? And of course, that is a major win if your strategy is a cash out refinance, right? We always want to try to refinance as much capital back out of the deal. Obviously, investors are always happy to get as much capital back. From a financial perspective, increases metrics like IRR and everything else, right? So this is a critical point to think about as an operator. Now, besides the financials and the exit strategy, one other perspective and one other reason why I've started to invest, especially recently, into the higher end finishes is because of the financial environment. Now, it's 2022. A lot of you guys know we've had quite a bit of changes, right? Interest rates have been up. Cap rates have been starting to decompress. There's kind of a lot of uncertainty in the area. So what I am doing is trying to really position my buildings to win regardless of what happens over the next 12 to 24 months, right? Because we could see a full out recession. We could see maybe just a little bit of a slowdown. But regardless, I want to put my buildings as the obvious choice for tenants to come into and rent, right? So if a tenant is comparing one of my units, right, where I've spent a little bit more money versus another unit where they maybe didn't spend the money on the countertops, it doesn't look as nice and it doesn't feel as nice, I'm going to beat them out, right? So basically it's really a defensive strategy. Again, especially considering where we are in the economic cycle, I think those kinds of units are gonna minimize the amount of vacancy we're gonna have, minimize the turnover we're gonna have, and really protect us if something really bad does happen in the financial environment over the next 12 to 24 months. So hopefully that makes sense, guys. Hopefully you understand, again, why I'm kind of spending more money, than I have previously on really investing into my finishes in my rental product. There's a lot of different considerations, as we talked about, from a financial perspective, exit strategy perspective, and of course, where we are in the market cycle. So if you have any questions, any thoughts, make sure you put them in the comments below.